welcome to this video. In this video I'll have a look at the dynamic levels, and I'll show you how to use them to identify historically respected price action levels. So if we go here and we get up the settings of the indicator, and then you can see here there's a setting called enable trend lines. Just set this to true. Then if you scroll down just a little bit, you can see enable dynamic analysis. Set this one to true as well, and simply press OK. Then you'll see these pink lines being drawn. So what we need to do here is we need to go to the weekly chart here and identify levels. These pink levels, they're not bulletproof levels of support and resistance, they're just kind of a ballpark levels that the indicator has calculated, and the fact that the indicator qualifies them is a reason enough to consider them. And you can see here that they're all generally quite nice levels. You can see here that we have some wick touches here and some more here, and you can see these are generally pretty good levels. So what I do here is that I go onto the weekly chart and I get this horizontal line tool, and I'll simply draw these lines directly onto the chart. And when I'm looking at the weekly level, for example, I get these trend lines and I'll change the color to orange. So those are my weekly levels. Then I'll find the other ones as well. We'll put another one just there. And you can see this is a really nice level through here, so we'll continue on and write this, draw that on there like that, and then we'll take the one just below as well, because that, again, that's a very, very nice level. If price comes down to this level, we certainly want to be looking for an area to buy. So we have 4 levels here, and I think we have enough here. So what we'll do now is that we'll go onto the daily chart and we'll do the same thing. You can see this is a very nice level once again. So we'll get our tool and we'll draw a line here. But on the daily chart, we'll use the color red. You can see this level again. Sorry, is a very nice level. We'll mark that one off. And this low here, which is very close to this one here. So if price comes down to this level, the daily level, and continuing on, we'll go to the 4-hour chart, and we'll continue once again, and we'll start here, and we'll get this level here, and we'll mark it off. But now we're on the 4-hour chart, so we'll change the color to Dodger blue. And you can use any color you want, but these are the color codes that I use when I mark my charts up. Then I kind of eyeball the other ones as well, some other levels, and I'll normally grab a trend line and I'll move it around, and you can see here this is a lovely level. So this is again a very nice 4-hour level, and I think we'll actually leave it at that. So now we'll go to the indicator and we'll reset it and we'll turn everything off. So now everything is turned off. Then we'll go to the enable previous period high low. We'll set this to true, and what this will do is it'll identify yearly levels, and it'll go back this number of years, so 3 years, which is again quite significant. You can change this to 5 or whatever you like, but 3 is generally quite a good number. Then we say enable previous period fibs, so we'll set this to true as well, and again the open and the close for the previous 3 years. Then we'll continue down here and we'll do the previous year. We'll set that to true, and the open as well. Then we'll go down here, high and low for the month, and then we're good to go there. And then we'll go to the week and we'll do the week high and the week open and close, and then that's it. We'll enable those. So now we have some really nice levels marked up here. And now what we want to do is we want to go back to the weekly chart, and we want to try and identify some channels. We don't want to force these channels, but we just want to see if we have something that might work out. So we'll kind of fiddle around with this a little bit. This is an okay channel. Not that good, so I think we'll delete that, and we'll go down to the daily chart and we'll try to do the same here from this high to this high here, we have a pretty good level here. We'll move this one down to the below here. Yeah, you can see here this works out relatively well. You can see that price came down, bounced, then it came down roughly to the same area and bounced again. Maybe if we move this here, everything lines up nicely. Yes, it does. As you can see, price bounced here, bounced down, touched, touched, touched. And the important thing to note here is that there were no closes either above these attempts to go higher, nor were there any closes below. So if we were looking at a trend line that looked like that, and you can see that the price, a bar, managed to close above this level, then technically speaking, this level is no longer valid. That said, it might be respected in the future. Nobody really knows, but I like to consider them to be invalidated once price has held above them. So that's a really good level. And again, we're on the daily chart, so we use red colors. Then we'll go to the 4-hour chart. We'll repeat the process, and here we'll grab the low here, and we'll go up to this one here. Let's change this quickly to Dodger Blue. There we are, and we'll try to do something similar here. Let's see. Maybe we'll move this up here. Let's see what this looks like on the bottom. The reason this is good is because, again, we had no closes outside of this channel. You can see price went up, but managed to close below. This is great. You can see here also we have our daily channel, which is the red one, along with the 4-hour channel, the blue one, and then we have this level here, which is the previous year high, which is a very, very significant level. And we're looking on the 4-hour chart, so all the levels we can see here are very significant. That said, price could blast through any of them at any time, depending on the fundamental views and the political sentiment around the world. But I think that it's safe to say that if you sold into at this level at a rising price, I think you would be doing okay. Let's see how far price managed to go above. See, 22 pips, that's pretty decent, I think. And if we're considering for a moment the fact that we're on a very or relatively high time frame, the 4-hour chart, if we gave ourselves a 30 pip stop, and you would ultimately want to sell when price came up to this level. So you'd have your limit order in to sell at this level. And this is a good level because we have a previous high, then we have our channels, and we have this level up here, which a previous period Fibonacci extension, 127 extension, which we could use as a protective stop level. So you'd want to put your stop on the other side of this level here, because once price comes up to this level, it's going to probably react and maybe reject price and push it lower. So here we can say that price went up. We had our 30 pip stop just there, and price is currently at 16 pips on the good side here, but it went 40 pips in our favor before it came back up again. So what you do here, you'd have your one-to-one risk reward, and you would have your first, you'd put your stop here roughly. You'd have your entry would be right at this level here. Your first target would be here at 40 pips, which would be right around there, maybe a little bit higher like that, so the same roughly, yep. And as soon as this target was hit, your stop would be moved here to break even. So now you would have a risk-free second portion of the trade. When I do trades, I normally open 2 positions each time. So if price comes up and stops you out, you still have your 40 pips, which is great. But there's a very good chance that price is going to continue lower to probably this level here before it continues higher, or even this level here. Let's have a quick look at the Fibonacci levels here and see what we have. Yeah, this is a 61% retracement of this move here, which is very nice. I'd probably wait for price to come down here, because when you have a very strong move up like this, price can be considered to be out of balance, and so price generally moves back into this price imbalance before continuing higher, as it did here. You can see price moved up very, very strongly, stalled, and then came back to the level at where price broke through. And this area is called, is sometimes referred to as a release point. So price was released from here, where price broke above this level, and it came back to precisely this level. And here the release point would be just here, and it broke higher, and so price may very well come back to this level. Actually, this is a release point because this is a previous swing high, this bearish pin bar up here. So this is a very good spot here. And then first of all, before you do anything, you think, where can I put my stop? So if you had your limit order to buy here, you could put your stop just below this swing low here, which again would provide us with some protection. Other levels of protection are this one here, the previous month open, very significant. We have a previous week close, very significant level, and we have a price reference point, which is this swing low. So you could put your stop just here, and your first target, of course, would be on the other side, which is just about there. So if price comes down here, took you into the trade, once your target, your first target was hit, your stop would be moved to break even. So you'd have a risk-free second portion of the trade. And then depending on how price goes, you can see that the major trend, the daily channel, is going up only gradually. On the 4-hour, going up quite quickly. So price could go up just for a little bit longer before probably moving back down to the other side of the channel before it continues higher. I would probably have all of my positions out of the trade when price got up to this level here, just around here, because we have a very significant level, the previous month high, and the previous 3-year Fibonacci 62% internal retracement. So we have some technical reasons to be out of this trade here, and we also have some historical level reasons to be out of this trade, this previous high here. So that's generally how I go about trading setups like this. The channels are very, very useful because they give you a very good indication of direction of the trend. So if you're if you're looking at a 4-hour channel like this, it's probably a good idea to stay out of the short trades and only buy this currency pair. You could of course sell when price gets to significant levels like this, for example, but you have to be very, very conservative, tight stops, small profits. There's a very good chance that price is probably going to continue higher. So if you're going counter trend in this upward channel, you really have to be paying attention to these previous areas of consolidation for your profit taking, and maybe even before, and also these technical levels, because price can easily stall and continue higher. So anyway, that's a brief walkthrough of how I'm looking at the charts. I normally modify these trend lines using the dynamic analysis indicator. I normally do it every evening before I go to bed, and so my charts are fresh and ready for the morning. It takes maybe 10 minutes for all of the currency pairs I trade, which are the majors. So that's certainly something that's manageable. Yeah, well, I think that's it for the time being. I hope this video has been useful, and we'll see you in the next video.